What could make this current market continue higher through the end of the year? This week, I'm going to make this report very brief because I'm back out in Wisconsin with my nephew and his wife taking care of some estate business. And look, they're in the other room watching the Bears play the Browns, so I'm sure you're going to hear some yelling and screaming in the background. Before we get into this week's video, regarding the equity markets, last week I said, but where are we now? Well, right now where we are is the bottom confirmation is falling. Confidence is falling a lot. I would say we're going to go higher next week, and you'll see that plays out in the metrics we're going to look at in the next slide. And I put a link to that video in the pinned comments below. And if we look at how equities performed this past week, you can see we've had a very healthy rally here, with small caps finishing on top, followed by ARK Invest, followed by the NASDAQ 100, followed by the Dow, and finally followed by the S&P 500. This is a very healthy appetite for risk going forward. And if we look back over the past month, fabulous. Look at this. ARK in first place, small caps, Dow, NASDAQ 100, and the S&P 500. This is looking very, very healthy. And if we look back at year to date, you can see that ARK is now above its previous high. Now, if you want to believe some guy that uses candlesticks to illuminate his house, you would think this is going to go higher from here. I don't follow that thought process, but I have to say that things look very good from the metrics that I'm looking at going forward.
I'm afraid to say how I feel.
And what about the bottom dynamics? Well, if we look at the bottom dynamics, there's really not much to see here. Now, you can see, as I predicted last week, the markets did in fact move higher this past week. But what are we seeing now? Well, there's no tell here. You can see that the bottom confirmation level is flat. You can see that the bottom forming level is flat. And you can see that the confidence level is flat. So there's no indication here as to the direction of equities next week. I really can't call this one way or the other, but as we look at some of the other metrics, you'll see that there's probably a pretty good tilt to the idea that markets will go higher next week. And this is one of them. So if we look at risk versus opportunity, you can see that the risk acceleration is just down here right at the bottom, about as low as it ever gets, just above 10. And risk, the red line, you can see it's continued to fall as I said it would. And then if we look at the opportunity level, it's still hanging out up here at a very healthy 70, call it 73, 74 level, which is very, very healthy. And what about equity versus safety? Well, if we look at equity versus safety, this is a very, very healthy looking picture here with equities up here. We've got treasuries up here at the top. Let's take a look at the individual components, though, and talk about what we're seeing here. So if we look at the NASDAQ 100, you can see that it rallied up here and went into first place, and then it kind of took a pause for the last few weeks, and now is moving up again. So this looks very, very good. And if we look at small caps kind of lagged behind the NASDAQ, but then you can see they really took off, went up here into second place, and have stayed there for the last 3 weeks. So this looks very healthy. Now, what if we look at cash? Well, if we follow the cash, you can see cash was down here at 9th place, which is great. Now, do we need to be concerned that cash has moved from 9 up to 8? Well, I'm going to tell you flat out, no, there's no reason for concern. Why did cash move from 9th up to 8th? Well, if you look at what happened to gold, gold collapsed from 6th down to 9th. So cash is performing better than gold right now in terms of ranking. So there's no cause for concern that cash got displaced up to 8th place because it got displaced by gold, which is performing worse. So no reason for concern here. And if we look at safety, you can see that here. You can see that gold dropped from 6th to 9th, actually, 6th to 9th place. And what happened was that pushed intermediate treasuries up one, it pushed cash up one, and short duration treasuries were still down here at the bottom. So no change there. So no reason for concern again. And if we look at the long bonds, yahoo! We've got the longest duration Treasuries EDV right up here in first place, solid. And we've got 20-year bonds in third place, right behind small caps. This is a very healthy risk appetite for long duration bonds and a very healthy risk appetite for equities, as you can see here. Nothing to worry about, folks. And how does all of this show up in the buying and selling pressure? Well, kind of an interesting picture because you had the Dow, which was on a very nice rally, kind of pulled back on Friday. And the buying pressure, the solid gray line, is kind of falling off here. Now, if we look at the S&P 500, a very, very similar picture. Falling price, falling buying pressure. So should we be concerned? Well, I think not, because if we look at the NASDAQ, which you can see consolidated over several weeks here, kind of went sideways to down and then took off again. Look at what's going on with the buying pressure. It's on an increase here, which is very healthy. So investors are taking their money out of some of the safer indices, especially the Dow, and putting it in to the NASDAQ 100. Now, what about ARK? Well, ARK, you can see also pulled back on Friday, but look at how high the buying pressure is relative to the selling pressure. So this I'm not terribly concerned about unless this continues to collapse. But right now, this looks very, very good. And we have a very similar picture for small caps, where small caps have rallied. They pulled back a bit on Friday, but just like ARK, the buying pressure is well above the selling pressure and has fallen somewhat here, but is still a very healthy distance above this selling pressure, this solid orange line. So I'm not concerned here yet. And what about sector rankings? Well, you remember these are kind of a lagging indicator, but let's take a look at what's happened since last week, this top table. You can see Bitcoin and technology were up here, NASDAQ 100, ARK Innovation. Cash was up here, still in the top half of the table. So what's happened this week? Well, you can see gold has fallen, as we've indicated, but Bitcoin and technology are still up here. ARK Innovation moved from down here up to fourth place. And cash has moved from here all the way down to here, which is excellent. Now you can see that long treasuries have started moving up in the rankings a little bit. So this paints a very good picture going forward. Now, let's take a look at sector rank acceleration. And I'm saying that these, and I always say that these tend to kind of point where things are headed rather than where they've been. And you can see that last week we had a very healthy situation. Cash down here at the bottom, consumer discretionary up here, ARK Innovation right at the top, semiconductors here, gold was here, treasuries were looking very good. Now what's happened this week? Well, innovation's still up here. Treasuries have moved up even more, but as you can see, gold has collapsed. Cash is still down at the bottom. So this is looking very healthy from a risk appetite standpoint. And speaking of treasuries, how have they been doing? Well, if you take a look at this, wow, for the week, these are equity returns, not fixed income returns, but you're looking at long duration bonds up over 8% for the week, followed by 20-year treasuries, and then the shorter duration ones here. This is a very healthy appetite for treasuries. And if we take a look over the last month, again, equity returns, totally equity returns for long treasuries. This looks great. And what if we look back over the past year? Well, if you look back over the past year, we're back almost to even on the really long duration treasuries. Now, these were down, call it 25% here. So if they get back to even, and I hope they do maybe before the end of the year, then this will have been a 33% rally to get back to even from a 25% drop. That's really amazing for fixed income returns. And how does all of this show up in the buying and selling pressure? Well, this is a very interesting picture. And why is it interesting? Well, you can see what's happening with short duration treasuries. Yeah, the price pulled back on Friday, and you can see that the buying pressure, while it was off the charts here, has been in a steady decline. And in fact, it's now below the selling pressure. So this looks very unhealthy initially when you look at it. And if we look at intermediate treasuries, kind of a somewhat similar picture, although the buying pressure, the solid gray line, is above the selling pressure, even though it's pointing downward. But then as we go out longer in duration to 7 to 10-year treasuries, you can see that, yeah, we had a little bit of a pause in the price here on Friday, but look at the buying pressure. It's pointing straight up almost. This is going up very aggressively, which is great. It tells me that investors are seeing a pause here and they're jumping in to buy. What about 20-year treasuries? Well, a very nice rally. Again, a pause on Friday, and look at the buying pressure pointing almost straight up. This looks very, very healthy for long duration treasuries going forward. And what about gold? Well, yep, gold's kind of lost its luster. You can see that here. It peaked out here and it's pulled back, tried to rally and started falling again. You can see this very strong rise in the selling pressure, the solid orange line. Now that collapsed and it's kind of pointing higher again. So I don't know where this is going to go going forward, but I wouldn't be a long investor in gold right now. And what about Bitcoin and cryptos in general? Well, you can see that we had an extremely strong rally here, and now we're taking a breather. Things are kind of going sideways here. And you can see that the selling pressure has been increasing recently, and the buying pressure has been falling off, although it seems to be on the rise here as the selling pressure is falling. So no way to tell where this is going to go. It may consolidate, for a few more days, a few weeks. No way to tell. We'll just have to wait and see on this one. And look, a lot is hinging on approval of the BlackRock Bitcoin ETF. So that could be a wild card in all of this going forward. So here's hoping that equities continue higher through the end of the year and provide a nice Santa rally that we all need after these last couple of years. Look, as an investor, you need to take the long view and allocate according to your risk tolerance rather than fretting about what's currently happening in the world that could turn the markets upside down. If you want to be a better investor, I discuss how to allocate your portfolios in 2 key videos linked in the pinned comments below. One is titled The Ideal Portfolio Using Just 2 ETFs or Mutual Funds, and the other one is The Ideal Portfolio Using Individual Equities. Again, link in the pinned comments. Until next week, I'm Calvin Rose, and thank you for watching Invest Smarter. That's all for now.